Good evening, everybody. I'm going to get going just in a moment or two. Thank you for your patience. All right, everybody, thank you for your patience. Welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight, we're going to go through the live Forex market, review it, and look at high probability trading levels that may be coming around. So before we do that, a bit of housekeeping, if you can read through the risk disclaimer. Any questions to the question and answer box? I've got the chat box open too. It's been a bit of a difficult week. We've got major news announcements coming out. We had the FOMC interest rate decision this morning. We've got, from memory serves, we've got the GDP figures coming out later this evening. We'll have a look at that in a moment. All right, if you don't know me, then my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time trader. Trade the market for more than 15 years, Forex market, and mentoring clients for more than 10. If you want to contact me, my address is on screen, duncan.cooper@acy.com. If you want to follow me through the week at our website, acy.com market news, then you'll find my analysis and videos there. Also on our YouTube channel, ACY Securities Australia, and you can connect with me personally if you like at those handles on Twitter and LinkedIn. As well, through the week, you can connect with me in our Telegram channel. Just contact Nathan Bray at acy.com. I'll put his details in the chat momentarily. If you want to get access to my chart layouts, which aren't downloadable just from the website, you need to you need to request my layouts, then simply contact Nathan. He'll sort you out. So I'll just give you his details right now. Put them in the chat for you. All right, that's in the chat. All right, first up, I just want to look at the news items coming out tonight. So this morning early, we had, these are New South Wales time. We had the interest rate decision in the US. Interest rates went up by 0.75%, 75 base points. Tonight we've got the advanced GDP coming out. Now what the market's looking at, come into this folder here, is quarter before was negative. So if we get a second quarter that's negative, theoretically then the US is in recession. So that's what the market's looking at. So personally, I'm not going to be trading until after the news. So I'm just going to go through levels that I'm watching that I can be starting to look at over the next 24 hours. I'm not going to be instigating a new trade until that news comes out, because if we go into recession, well, how does the market react? I don't know. So I don't want to just, I could obviously be, I've got a 50-50 chance of being on the right side of the market, I suppose, but I don't like to gamble. So I'm going to be waiting until the news comes out. So that's at 10:30 p.m. tonight. Not too far away. It's only 3.5 hours, and then you can start to look for trades. All right, so let's get to the charts. And I just want to have a click through before we have a look. All right, refresh my memory. What is going on? Nothing. I'm not saying anything setting up really that I want to take a trade on and be in it when the news comes out. Market's a little bit quiet generally. Got something coming in on the chat. Just bear with me. All right, so Cameron's telling me that he did set an order last night down at the 101.80 level, the 25 pip stop loss, and then he pulled it off because he went to bed, and it wouldn't have stopped him out, and now it's up 100 pips. Well, yeah, that's trading. I mean, I discussed that level in the Telegram yesterday. I think I discussed that level on Tuesday. There's a definite level that the market would potentially be watching, but then you obviously have to engage down at a level. I mean, if you have to hold it through the FOMC news, you know, things could have gone awry, but it just proves the quality of the level. Yep, as you say, the analysis was spot on, even if you didn't manage to profit. I mean, this week, I haven't actually traded this week. I've been trying to avoid the news. I've been trying to get in where I could maybe, but not have to worry about the news, and I haven't really found an opportunity. But I've been looking at levels, and the levels are working fine, but it's a question of if I got in, I'd have to hold it through the news. So there we go. All right, let's have a look at the dollar index first up. And we're still having a positive month, but we're obviously having some withdrawal from the resistance on the monthly chart back in time here. All right, it's not showing a change in trend as such, but it's showing some selling pressure down from the 108.09 level. The weeklies, it may have another week down this week, time will tell. But looking, if this has another bit of a dip down, it may come down to this old top, okay, to be support, 105.70. So you just need a US dollar is having 1 or 2 weeks down. Pairs to the US dollar are doing the opposite. And we might be falling a bit of a base here, time will tell. Once we get past the news tonight, then we'll have a bit more of an idea. So we're seeing a fraction weakness on the US dollar index. And the S&P 500, this is the weekly chart look, a bit of positivity at the moment, moving up on the weekly chart. The monthly chart, though, is still down. We're up for the month. I don't know if we're putting in a bottom there or not, but we're certainly having a little bit of positivity on the stock market at the moment. All right, so we're seeing a bit of stock market positivity at the moment, a bit of US dollar weakness. Usually that's the case. One's positive, one's negative. So they're all kind of correlated in that form. And what we're definitely seeing is, if we go to have a quick look at gold, we're seeing some positivity on that. In that, this is the monthly chart lows here that we got down within a few dollars last week. Showed a weekly chart reversal candle. And now we're moving above the last lower top. So looking for, there's a bit of a higher bottom area there, but looking for a more significant higher bottom to come in to really start to show a trend there. But we're definitely seeing a change possibly in trend on the gold there at major support. Time will tell. It's not changing the weekly trend yet, but we're seeing a day chart trend change there for sure. All right. So I'm just going to go through the pairs from left to right. In fact, I might start with the dollar yen just because, I mean, I'm just going to talk about levels I'm watching. What you guys and girls do in the face of the news coming out later on tonight, it's up to you. So, you know, I'm just talking about analysis. If you see something you want to trade, that's entirely up to you. You are making the decisions, so you are the one to blame if it doesn't work. And especially if you're in the market when the news comes out and it goes berserk. So you're always making your own decisions. All right, now I actually talked about this level in the Telegram today, which we're holding at the moment. Whether we're going to be holding there post news, time will tell. So on the monthly chart on dollar yen, squashing it in. We're above this top here at 135.16. Of course, the monthly candle is looking negative, but the trend is up. And we're pulling back to that level today. Weekly trend is just up, but having 2 negative weeks. I do note on the daily that we've got some divergence showing here, but that could just be showing that because of the market's a little bit too overbought. It needs to pull back just a fraction or two. And as long as we hold at this support level, then we could well hold here for a further move up. Now, if you start to break below it with some conviction, then, okay, this negative divergence may be a bit more of a story tell. But at the moment, the key level of support, which is the monthly top, we've traded to it today, fraction below, but we're above it at the moment. So, if we go to the 4-hour chart, it's just showing you this downtrend, but we're into that level of support here. So it is a question of what is your trigger to get in. If you want to be a buyer down here, what's your trigger? It is showing some form of support and consolidation in this area, but it's just waiting for the news. It has given you a little bit of an upward move, but then it's fallen back down and may not do too much before the news comes out. What will it do after that? All right. It is a great level of support. So if we start to see over the next 24 hours a bit more of a, if we see a change in trend from getting support on that one candle there, if we start to see a 4-hour structure change, I can get my line in here. If we start to see a bit of a higher bottom coming in, we get a 4-hour higher bottom starting to form, or even better, an upward structure, then a pullback to a 62.79% level with more upward structure starting to form, like we get over here in general terms. So we moved up to a higher top here, we pull back here. We're not seeing that yet, but we're at a great level where the market could hold for another month up if it really wants to. It's just a question of what does the market do after the news? All right, at the moment, it's, I would say, dangerous to be trading down there, within 3 hours and 15 minutes, we've got the news coming out. So after the news, if you want to be more aggressive, then, it may well spike down back into this area, start to hold and deal above. Then you could look to a more aggressive entry. All right. So you can always look for an aggressive entry or look for more of a change in trend. At the moment, it's just hanging just above that level and waiting for the news. So I'm going to wait to see what that does after the news. Does it hold there and give you a reversal back up post news? Slav, I'm just reading what you're saying to me. So you're saying in regards to tonight news, wouldn't the market have taken off all the majority of the build-up stress in its post the 4M interest rate news today, and then the news later tonight might not be followed by big movements in the market? Oh, I don't know. I don't try and second guess. The market went up obviously this morning. It could well move back down the opposite way after the news tonight, or it could have another leg up. So I don't expect that the market will be quiet, because the market's looking to see if we've got a recession forming in the US. So I'm sure we're going to see some volatility. All right, so that's the dollar yen. So we are having 2 weeks down now. It's not changing the trend, but for this upward trend to hold, it would be good to see this monthly level of support hold. Okay, this would be a great area. If we start to hold here over a number of days and form a base, that would probably be the area where the market's collecting more buys to move up. All right, Aussie Yen, today chart. Now, earlier in the week, I did some video commentary and saying that I was looking for this to form a lower top to move down. It is forming a lower top at this resistance area. 95.32, daily resistance and weekly top over here. Now, if this is going to have a deeper run down, it needs to break support at 33.68, and there's just a fraction of higher bottom there too, to maybe come down to the lower depths of support here. All right, so whilst it is showing some selling pressure in this area, it can easily stop, change and move up. But at the moment, in line with the dollar yen moving down, this is selling off. So in terms of looking at what's going on, the 4-hour structure has turned down. All right. In terms of getting on board, market may well rally back up in the short term. So it's moved down. Does it rally back up to the 62 level? Does it come back up to retest 95.32? Does it come up to the 79% level? So 3 levels there, an area there to watch. It's moved down to a lower low on the 4 hours. You're going to come up and put in a lower top. So the area to watch for that, it would be up here. Just move that back to my orange, my normal orange. There we go. So I'll be watching that area for a lower top on the 4-hour chart to form. Okay. Aussie dollar. All right, what I'm looking at on the Aussie dollar is the fact that the weekly trend is still down. We're just having a couple of weeks up. So whilst the day chart is up, the overall trend is down. So I'm monitoring this pullback to see where it can finish. This is the last weekly leg down. So logically, I'm looking at the 62 level or the 79 level. This last little rally up here really failed in this zone here at 70.30. So we're trading at 70.03. So 62% at 70.53. So anywhere from 70.30 up to 70.53, even into this top here. I'm going to start to watch that area. What does price do? Looking for where price might top out. Put in the lower top on the weekly chart. All right, so I'm not that fussed about trying to trade this up. There's not much space left between where we're at now. There's only like 50 pips from where we're at now to the 62% level. All right, so I'm just watching what happens in this area here. All right. So I'm looking to the sell side if we can see a clear failure in that area. Trade back down. All right, Euro Yen day chart. Just checking my chat's all clear. All right, it's a bit of a difficult pair, this one, in that I'm going to take some of the lines off for the moment. The monthly trend is up here and we're having a month down. Okay. But the trend's up. And the weekly gets a little bit, in terms of the big swing points, higher bottom to top. This is a potential higher bottom here, but we did have this rejection last week. So is this putting a lower top here? So higher bottom, is this a lower top forming here? So it's, in my mind, a bit difficult because it got good support here and it's reversing here. So is it going to come down to support and hold, or is this change in trend? I can see the MACDs crossing down. So my line's back in. So hopefully you can see here that we've got this top, and when we came down, we rejected back up. Then we came below that level to the next level of support, traded in there before moving back out. So at the moment, I'm just watching this area here. All right, because on the day chart, that's moved up through that top to a higher top. And if we put a higher bottom in somewhere here, it keeps the day chart price structure up. So the weeklies are looking a little bit mixed. Day chart structure is still up, even though we're trading down for most of the week. So I'm just watching 138.31 support there. I know we're trading fraction below it now, but where does it close today? You know, if we close above that level today, or back at that level today, I'm going to start to look to see if that level wants to hold, because we've had that move. Of course, we're correcting down, but you know, are we going like so? Because don't forget, the euro side interest rates have risen and the Japanese side hasn't. So all these yen crosses are starting to have the carry trade look about them. Interest rates are higher on the US side, zero on the yen side. So in terms of interest rate differentials, this moving considerably lower kind of flies in the face of the interest rate differential, unless the euro as a currency itself is still going to heavily sell off. So I'm just watching from 138.31 down to this level of support at 136.79. Does price start to turn around here? Because if it turns around in this area, moves back above 138.31, this is the kind of price structure we could well be looking at over the next few weeks. All right. So we'll have to wait and see what the news does tonight. If you drop it down to the 50-minute chart, you can just see there we are consolidating. Yes, just managing to hold below 138.31 for the moment. But when I wake up tomorrow, I'm going to be asking myself, where are we in relation to 138.31? Are we back above it? Okay. Euro dollar. Day chart. Now, I've been saying this all week. I want to see it up to 103.40, which is broken monthly support. 103.40 now weekly resistance here as well. And daily resistance at 103.59. Whether or not it can pop up that high, so I can look to sell at a higher point within the overall weekly, monthly downtrend that we're seeing. Time will tell, because it is a bit consolidatory here. And in the consolidation, I know, Cameron, you were looking down here to trade. And 101.18 is an old level of monthly support that got broken. On that candle there, it was resistance. So if we turn to the 4-hour chart, here it was resistance. And the level has actually worked quite well, because last week we moved above it and it came down there to 101.19. The level's at 101.18. We traded a little bit below it. We went down to 101.07 and went down to 100.9. But ultimately, 101.18 support level then held for a move back up. But you can see on the 4-hour chart that we're range bound. And in the Telegram, I was discussing, you know, post news today. I'm looking at 102. Let me just check. That's at 102.58 is the exact level I'm using at the moment. 102.58, that level of resistance just there. And this is last week's high. So I've actually got a couple of areas I'm watching. First of all, you know, I'd love it to come up to the 103.40 level, but I don't know if it's going to get there because of the consolidation that we're seeing. So we may only come into this area. So I'm watching that area, 102.58 to 102.78. Just price come into that area, hold and fail. And then does it move back down to, again, test 101.18? So live, you're asking me, do we see lower tops and bottoms forming? Well, potentially. I mean, that's the lower bottom to that bottom, but for me, it's more range bound at the moment. I'd be happier if I'm going to look to engage on this pair. I'd be a lot happier being a seller here rather than maybe, say, drawing a fib and trying to sell it at 79, just because the overall look of it. Now, of course, what I'd prefer to do doesn't mean to say the market will give me what I prefer. The market may well be failing, say, there at the 79% retracement. But if I have a choice between, say, selling there or selling up there, I'd go up there. But in any event, I'm not going to trade it before the news. So if it's failing there right now, the news comes out and it drops, I'm going to miss. So I'm aware that I could draw my fib like so, and I'm aware what price is doing right now. But I want to know what price is doing come the news. And more often than not, when we're in a range, we stick within the boundaries of the range. I know we just got below here, so there'll be some traders here thinking this is breaking out, and then clearly it hasn't. Now, it might not get up to the upper end. It may just be pausing where it is there. And of course, as a trader, you have to make your decision. Do you think it's trading at the 79 now, or is it moving up to the top? All right. In my own trading, I'm more of support and resistance rather than a fib. I prefer to take the support and resistance rather than the fib, but all depends. It just looked like this is the most opportune area that the market might spike up to in the volatility of the news. All right. So you're asking me, is it good? The orange area is a good opportunity to look for a sell. That was your question. Is it a good area? It's a good area to watch. Of course, price could blow straight through there when the news comes out. So what I'm going to be watching is, how does price react in this area when the news comes out? Does it trade up, start to hold? You know, let's just go down to the 15-minute chart here. If get my drawing tool. So when the news comes out, if it comes up here and then starts to want to move below, that's a good sign we're failing there. And then does it come back up and retest and hold? Like so. All right. So I'll just have to watch and see. At the moment, I don't see this getting up there anytime soon, because this looks a little bit more negative than positive at the moment on the 15. But what does it do when the news comes out? Does it have a quick spike up here before moving down? Time will tell. See when the news came out this morning. See how it spiked down to a support level and then went back up. All right. So I'm looking for this to spike up there and then want to move back down. You ask me, what if the price moves up to orange in 5 minutes and then back down? Well, you can do that. I mean, if you want to trade up there, just put your order there. But of course, price could spike straight through. So you could be watching that on a 5-minute chart. You could be watching on a 1-minute chart. You could be saying to yourself, if it trades up there on a 5-minute chart, and if a candle on the 5-minute chart closes back below, you could trade that as a rejection and then trade. So of course you could be watching that on the 50-minute chart, and it trades into there and trades back straight back down, and you miss the whole deal. So you have to decide for yourself what is going to tell you for you to click the button to sell when the market's very volatile. Now, sometimes when the market's very volatile, it doesn't just spike in and spike out. It goes in, starts to form a couple of 15-minute candles before it starts to want to hold and give you a sign that it wants to trade down, like a trend line break. So sometimes the market's really easy at a level. Other times you have to decide real quick, do you want to engage or not? All right, so you'll have to wait and see. And what you'll find is the more that you get the levels drawn in properly and then start to see what price is doing, like if we look at this level here, say on a 5-minute chart, let me just clear that off. All right, there's the 5-minute look. 5-minute candle closes below. So now if you're using a 5-minute judgment, you probably go, well, that's closed below, so I'm going to have to wait. Next 5-minute candle closes all the way up there. So then make a decision then, stop below there, that's 50 pips. So sometimes it doesn't give you a small pip risk amount because the market's just moving that quick. All right. Sometimes it gives you enough time to get in. I mean, you can drop that down to a 1 minute chart. All right. Now, comes down, starts to hold. I mean, you could, in this 1 minute area here, look at, that's a positive blue candle. You could go, if it breaks above the positive blue candle, I want to get in. And you put your stop below low. But then you're doing at a very finite level of price action. And that's fine to do that, but then you'd need to watch a number of these to have the confidence that you're reading price action, and that if you want to trade at that such a lower time frame to get a signal to take a trade, that over a series of trades, you're calling them more right than wrong. All right, because you're not going to be right all the time if you're dealing off a 1 minute chart. Of course, your stops are short, but you may have 2 or 3 losses before you get one right. And when you get one right and with such low risk, you can get high reward. So the finer detail you go down to, potentially the more little stop outs you get. So you have to decide yourself how you want to engage and what finite time frame you want to look at for some kind of signal that you can get in. All right. All right. But of course, you can go back in time. So whilst you might be watching price action tonight, up here, you can obviously review it tomorrow on a 5 minute chart, on a 1 minute chart, and start to think about, okay, if I was going to engage on those time frames, how would I have done it from a hindsight perspective? And the more you watch it from a hindsight perspective, the more that becomes your foresight to then have the courage to then have some conviction to do it on a real tight time frame. All right, Slav. So I don't know if you want to get into such a finite detail, but I don't generally do that. I just start to watch the 50-minute candle as it's up there. If I start to see it withdrawing quickly, I often just click in. But I've watched the levels and how price does its thing at these levels for many years. So it's lots of back testing, watching, so you can start to see yourself how price withdraws from an area when the news spikes it up, so that you've got the confidence, to have a go at those levels. And sometimes you're going to be wrong. So sometimes when I'm seeing price do its thing up there, nothing's making sense to me, and I don't do anything. So it's all depends how price gets delivered there and starts to want to react. If I'm seeing something that I've seen, it's how price reacts many, many times, and I go, okay, that looks like it's going to sell off from that level, I'll click in. But you have to watch price action or see how it does its thing. Because as I showed you there on a 50-minute chart yesterday, well, if you use a 15-minute candle, it's too late, it's way up there. Even on a 5-minute candle, as I showed you on a 5-minute candle, that's a 50 pip risk at least in this area, and sometimes you just have to go, it's too much risk. So then you have to wait for a less riskier opportunity to get in. All right. All right, pound yen. Now, it's at the 164.64 level at the moment, where it's been moving above, moving below. Now, it has actually moved up higher to test the next level of daily chart resistance up here. And I don't really know what's going on with this pair, other than it looks fractionally like it's more in an uptrend than failing. Higher top, higher bottom. I know it's holding there at the moment, but come the end of today, it may well not be. But 164.64 has been a well-used level. So after today, where are we in relation to 164.64? If we're below 164.64, look at that level tomorrow intraday to be resistance. At the moment, if you go into the 50-minute chart, here's that level. It has been support today. I know this current candle is fractioning below it, but it doesn't mean to say we'll be below it come the news release after that. So if we clearly break below it today, look at that level to be revisited for resistance tomorrow. We've talked about this level countless weeks. It's been used countless times to trade up from and down from. So at the moment, it's asking itself, does it want to be support to move potentially up? I know that one little 50-minute candles is below, but look at all this trading here, which was fractioning below before it moved up. So really what I'm seeing there is the market's just watching that area at the moment for potential support, but the news will prove what that level is going to be over the next 24 hours. The pound dollar to daily. We're at a very key area of resistance at the moment. This is a weekly low, 121.55. All right. I'm actually watching two levels, that level and this level here, 123.32. Weekly chart. We're just having a 2-week rally within the overall downtrend. Back to the daily. So the 62 level lines up with the 123.32 resistance here. So that would be my preferred option to look to see what price is up there. But I'm aware that we're at weekly resistance at 121.55. So those are two levels that I'm watching. See what the market's doing after the news, and then see where price is relative to those levels. And then I'll, see what I want to do. But those are two levels that I want to watch. Now, after the news tonight, we're kind of just fractionally above 121.55 at the moment. Maybe it's starting to become support or not. We'll have to wait and see. If we have a good drop, if we move down below there today, say back down to 120.100, certainly tomorrow, we'll look at that level to be resistance. All right, but we'll just have to wait and see what price, where does price sit after the news? All right, New Zealand yen. It's just stuck in the range at the moment. What we can see is from the sell side perspective up here, 86.40, which is a monthly area of resistance, up to this weekly top, 87.33. Every time it gets in there at the moment, it moves back down. So to me, the logical, if you want to trade this pair, is does it come back up into that area where the sellers are? All right. It's not the best pair at the moment, other than it is good selling above 86.40. Other than that, once it gets back below a bit, it's a bit choppy, range bound. So that's just one area that I'm watching. New Zealand dollar. I'm pretty sure the other day I mentioned 62.04 to everybody, which is a monthly level of broken support that we're back above. And last week, Wednesday, Thursday, Tuesday we moved above, Wednesday, Thursday became support. Yes, we did dip below that level fraction yesterday, but the trend structure on the daily there is up. It just came back down to where the buyers are at or around 62.04 for a move back up. Now, we can't go back in time, but I've been discussing 62.04. Hopefully somebody may have looked at the area if you wanted to trade that pair. Now, we could, this looks to me rather range bound. We could still just drawing in the rough range there. There's 62.04. We can still come back down. You know, we're heading into August soon. August is the summer month in the Northern Hemisphere, and often we can just be a little bit more range bound. So we may just be range bound through August. So if that's the, and I don't know what price is going to do, but we're already starting to see that range bound effect on the euro dollar. This could just stay in that range for a good amount of time. And the key level to buy at is 62.04. All right, while it might gradually grind up because the weekly trend is down, but what we're doing, like on the Aussie, there's the weekly range. You know, this is only just getting above the 38% level towards the 50. This might want to come up to the 62 to the 79. So at the moment, it's just consolidating and fighting its way up. I'm looking for a lower top to form on the weekly, but not in between the 38 and the 50 level, more up to the 62 to 79. So it offers you the opportunity if you're thinking that way. And it is a little bit range bound. And the general range is where I just colored it in before. Is, you know, that's just a fractional higher bottom to that bottom. That's fractionally higher to that area. So it's just, you know, I could use the equidistant channel thing. It may just slowly be grinding up towards the 62. So if it has another dip down to 62.04, that's the key area to look for if you want to be a buyer. Up here is where you're going to start to find selling pressure to move back down. If it's going to keep that slight slanty channel on a slight upward move, we could well see a move back down to 62.04 once more to buy for a move up to the 62 level up here. All right. All right, dollar Canadian. All right, last Tuesday, we were talking about that 62% level. We haven't quite got there yet. Heading there though, haven't got there yet. We might get down to the 79% level. All right, the big structural moves, this is the weekly chart up move. This is the weekly chart down move. That's the next weekly chart up move. So if I just copy that down move, not sure how that measures. So very, very similar in length to the last two upward moves are very similar. So then are we going to get a similar decline? That would take you into the 79% area. And then I would be wanting to trade that pair. Structurally on the big time frame weekly, it's in an uptrend. This is just a corrective move. I would be getting ready around this area to see if the market holds to move up for the next leg. It is in an uptrend on the weekly, even though it's range bound. Let me just tidy that off. Weekly has been very flat to slightly up now. So is it doing it as I was just showing you on the daily? Get my things to come back in. You know, is that the structure that we're holding to for then pull back to the 79? Now, of course, if that's what you think is going to happen, there's movement down to the 79% level. So you could look to intraday trade if you like to trade that pair. I don't trade that pair personally intraday, but if I see this hold down here at 79, I might look for a long position back up. All right. Any questions? So after tonight, just for those maybe coming in a bit late, got the US GDP figures coming out. So we've had the interest rate decision. We've had the GDP at 10:30 coming out. I don't know if there's any, hopefully after that, we can have some trading, stretch of trading days where there's not too many news items that we'll really have to worry about. We've already had the job figures for the month. But that being said, we are moving into a new month. So job figures, Job figures next Friday. So just looking into next week's news. ISM manufacturing midnight Tuesday. Job openings Wednesday. So the big one really would be the job figures on Friday next week. Once there are some other red column events, I don't worry about those too much. The US job figures will be the big one for the US next week. Of course, we've got the Aussie interest rate decision coming out, and it's not telling us what they think it's going to be here yet, but I think probably most people are expecting 50 base point rise for the Aussie next week. So we're heading into a new month next week, so we may have a month up at the start of the month, as I was saying on the Aussie. I'm looking for, I'll get my right charts up. Aussie dollar here with that interest rate decision coming next week. I'm looking for a move into the 62 level, 70.53 level there. And, you know, obviously we could get there this week, but if we don't get there this week to get there, then we'd have to have a month up. And then what we can look at is, you know, are we able to hold the high of this month, next month? If we start to falter at the previous month's high, like I was talking about yesterday's webinar, that would be a very good focal point to look to trade around to the downside on the Aussie dollar. All right, so if we can have a month up next month, and then can we hold the high of last month or not? Look at that area for a good key area to trade around. All right, so that's what I'm looking on the Aussie next week as we get into that interest rate decision. Of course, the market's probably expecting 50 base points, but are we heading up here to put in a lower top? So I'm going to be looking for that lower top next week. We'll see whether it comes in next week or not. All right, any final questions? While you're thinking about it, then I'm just going to let you know what's coming up next week. Tuesdays and Thursdays are live market analysis. So 7 o'clock Tuesday, 7 o'clock Thursday. From education webinar on Wednesday, we've got, I'm going to be talking about market structure. So I have touched on market structure before in terms of support and resistance in what I would call much more of a beginner starting webinar, but I want to look at market structure and get your head around that it's market structure is a repetitive thing. So if you can clearly see what structures at play, you should then be able to look at how to construct your trades. All right, because the structure is going to dictate what you should be doing. So if you've got a blueprint of the structure, and then you go, okay, that's the structure, what the chart's telling me at the moment in terms of structure, and you apply the blueprint to what you're seeing on the charts, and then you should know what you're doing in terms of should you be buying, should you be selling, so on and so forth. So that's what I'm going to be talking about next Wednesday. Slav, you're asking me, hasn't the market included already the Aussie dollar interest rate rise? Well, it's factoring it in for sure. But what it will do when it gets announced, who knows? So the market's heading up. I'm sure it's factoring that heading up. I'm sure it's factoring in that rise at the moment. So if we get the expected rise, then maybe once the expected rise comes in, we might decline. Because if the market's factored in the rise and the rise comes out as expected, would we really go up anymore after the rise? Because the market will have priced it in. Unless the RBA comes out after the interest rate rise with some commentary that's even more hawkish than anticipated, we could then further move up. So I would suggest at the moment the market's moving up, pricing in the interest rate rise. If it's priced in, once the rise comes out, then we may well move down. That would be how I would look at it, but I always have a very open mind to what the market wants to do after the news release. All right, because trying to work out, trying to be like a 100% scientific in terms of, okay, we think this is the print, data, then it comes out on the print, and then the market sometimes doesn't do what you expect from the print. So it's not as, for me anyway, I don't think it's that scientific. Yes, you can look at it logically, but you know, that's why at those key times of the month, usually I'm not trading. I'm waiting to see what price wants to do. All right, rather than trying to guess. All right, you know, for me on the Aussie, before I go, I would need to be up a good 75 pips. If I shorted this pair to the downside, I'd need to be up 75 pips to 100 pips for me to be comfortable about holding my position. I'm not going to be in a position where I'm up 20 pips and go, I can hold that through the interest rate decision, because what happens if they come out with a 75 base point rise? Okay. It's just too risky. At the moment, the market's very driven by interest rate changes. So then that's the most volatile part of the month at the moment for a currency. So just wait and then decide what to do afterwards. I know waiting and then deciding to do afterwards sometimes mean you can't do anything because the thing just moves and you can't get in. But I know that's frustrating, but it's as frustrating for you as it is for me. I don't have a special method of getting in around those volatile times. All right. And somebody's telling me the euro's moving down rapidly. Yeah, it's selling off. I mean, it could be back down to 101.18 by start of the news. And 101.18 could be support today. Again, Cameron, you know, 101 could still be support at the end of the day to move back up, depending what the news does. All right, so yeah, it's moving down at the moment. I mean, I know I'm not engaging in the market at the moment, so after the news, doesn't stop you guys engaging if you want to, but I'm just waiting for the news to come out, because I don't want to get into a trade right now and then be slightly up or slightly down. Worse effect, slightly down with the news coming out, and then I have to close it for a loss. All right, I'd rather wait for the news to come out and then start from there. All right, everybody. So I've given you levels I'm watching, so you can watch those levels as we head into Friday, into the new week, and then we'll see what's happening next Tuesday when I hop back onto the webinar. All right, so have a great weekend. Stay safe.